Good evening. This is Sunday evening. This 5:47 Sunday evening. The 4th of January. 4th of January. I want to do weekly breakdown of the trade I will be taking this week, and then how I see why I call it out and how it's supposed to be, and by God's grace, how it's gonna work out. So we start now. Let me start now. So we are using weekly profile, daily profiling. Then we're still incorporating our order block and liquidity strategy. Those are these things that we're still using. So we are gonna use all that. So before I start, let me start with the monthly. So this month, for my analysis now, because the structure of the market tells us varies often. There are times you will come and see one thing in the market and then it changes your bias because of what the structure that the market is presenting. So you interpret it based on the structure you're seeing and what the chart is presenting at a particular time. So at this time now, I'm judging my bias bearish, not just because all the candles here are bearish, no, but because one, this the high of this month has been taken and it tapped into this fair value gap, and when it did, it rejected abruptly, and then the next month too, being December, went down. Now we are expecting downward momentum for this month. So having said that, I would want this month to at least take out this month's low before just coming to this ones. At least this place I place that cursor. That takes us to the weekly. The weekly has been trending down since it tapped into that daily that monthly FEG. It has been trending down since then. So we still expect it to be bearish this week, to be bearish. But before it comes to this bearish, we now talk about the weekly profile. Weekly profile is the open, high, low, close of a candle, and of this one now it's of the weekly candle. So since we are expecting lower momentum for this week, we would want to see price go up before coming down. So that's why we are currently going bullish now. There are times that it will first go bullish or first come bearish. Even when it wants to be bearish, it will first come bearish, go bullish first before ending bearish. So those ones are manipulative. So let's step down gradually as we dissect this. So at this point, this is the daily time frame. So at this point now, I will put this period separator and then explain it. So this is the period separator, and this is in the daily time frame. From this daily time frame, from here, that is the 1st of December 2025 till here is 1 month. So it's separating them. So you can see that this was bearish. From here, it came down, went up, could not take this high, came down, created another high, came down. So it was bearish throughout the month of December. So, and then we then move to January now. So it's first coming down here. It wants to first go back up and then continue downwards, and if it does, we will know from the chart. But for now, we are expecting bearish momentum from what I described earlier. and then as we go further, I'll tell you about the liquidity point I've already mapped out and how that happens. Now, before I move again, this is, excuse me, is the daily time frame. Okay, let's count it. This is Sunday, Monday, Tuesday, Wednesday, Thursday, Friday, Saturday. So from here to here signify 1 week. So the week started on Sunday, and this is what it did. It came up, tapped into this fair value gap, right? It came up, tapped into this fair value gap. That's it. It tapped into that fair value gap, which means, how did the week start? It knew it was going to go bearish. So what it did first was to go bullish. Tapped to this fair value gap on Sunday, reject, and then Monday started the work, bearish, and then Wednesday was now a continuation, but it had to go back and look for something. So one thing you should realize is that when it has to be bearish, it has to first go up first, manipulate, and then trick people that it's going to go up before coming down. That's what it's doing. Even for this week now, it has to go up first. People now think it's going up, and then it will come back down. So this is the last week. It went up, tapped into this. Maybe we're still thinking that it will continue to go up, it will clear all this. No, it came down, and then this came, reacted to this other block. This is a very valid other block here. Reacted from it, daily order block, then came down, and then continued down, and then Saturday closed the range. So it was fully bearish. Now let's shift. So that is the purpose of the period separator. Let's delete this out and then move to the 4-hour time frame. Then I'll tell you how this trade came about. So this is the 4-hour time frame. This 4-hour time frame for the period separator, just like I said, in the daily is different, in the 4-hour is different. So in this 4-hourly time frame, you can see this is 28th of 12, and this is the 4th of January. So that is 1 week. The period separator for 4-hourly is 1 week. So how did the week start? Like I said in daily, it went up first and then started coming down. This is Sunday, this is Monday and Tuesday, this is around Wednesday that took it up, then this is Thursday, Friday and Saturday, and all this. So now when all this happened, it was causing something called a downtrend. First of all, you can see how it's going low, high. It created this consolidation here. I label it as a liquidity point. Label it as a liquidity point, as per there are much liquidities residing here to be grabbed. Okay, same with this. Let me put it as well. Same with this. There are much liquidity points here, liquidity resting there. So what we expect to see is that price will take out this liquidity within Monday, Tuesday, or anytime, and possibly this, and then we reverse. We just want to see a reverse down. Okay, so that's it. So for the period separator, it separates the 4-hourly into weekly. For the daily, it separates it into monthly. So separated this into weekly, and the weekly profile still lines up. I've shown you the monthly profile. Up, first went up and then started coming down with that trend. So this is same for this volatility 50 and 4-hourly, but this is the weekly. So when this weekly started, it did go up, started coming down, went up, started coming down, went up, started coming down, went up. So the only issue now is, where will you find the reversals? So that's the only thing, because if it keeps going like this, if you enter here, it will take you out, especially if you have a small account and all that. So I was best we touch that as well. Now let's move into the 1 hour hourly time frame as well. Okay, this is the hourly time frame, and in this hourly time frame, I discovered that the hourly time frame is majorly the daily profile. The daily profile. Let's take this daily profile. Let's take this daily profile. This one started here. What did it do? It came back down. Okay, this is to 12, about 1 in my own time. 1, 2, 3, all this, and then went up. So on this day, it will not there is no trend on this day. It just consolidated. What it did here was pure consolidation on this day. Now let me show you how the candle will be. The candle will not go, it will just go up and come back down, and it will just be almost an indecisive candle. This is on the 1st of January. Let's go to the daily time frame and confirm that. We'll come back to the hourly. First, you see, this is it. I told you, almost an indecisive candle. It went up, come back down, and went and close. You see, almost an indecisive candle. Not do anything like going up or coming down straight up. So almost indecisive. So that is it for that day. So now for other days like this day, see the way it came back down. And one thing you should always know or note is that if you can get the daily profile, you are good to go. This daily profile for this day, this particular day I am now, from the 1 hour hourly time frame, like I told you, the daily profile helps you to be able to get the low or high of the day, so that you can know where you position yourself in the trend to continue the trend. Okay, so now this is today, a day. The daily profile of this day was from with the use of hindsight, it came back down and started going up till the day, and then came back down. Okay, so if you had positioned yourself in maybe this type of place, now you've seen that it has come back down, and when it comes back down, it must do something. It either takes out liquidity or taps into a fair value gap or something. This day it tapped into it tipped out liquidity here. Let's see what this day looked like. This was the 3rd. On the 3rd, it went up and came down. Let's check it in the daily time frame. On the 3rd, it went up and came down. This should be the 3rd. Yes, it's okay. This is it. It first came down, took out liquidity, because today is 4th. It first came down, took out liquidity, just like we said in the hourly time frame. After taking out liquidity, what did it do? It went back up and then came down. So that was what happened to that day. On the daily, on the hourly, let me go back and show you. This is it. It came down, took out this liquidity, climbed up, kept going, and used this to cap off the day. Reacted to this fair value gap to cap off the day. So that is it for the daily. That is how the daily works. So before you take any trade, what you should do is, are you able to get the profile of that day? If you're not able to get the profile of that day, it makes it difficult for you to be able to assess, to get a good trade for that day. So it's always good to get the profile of the day, and better if you have the weekly profile as well, the weekly, the monthly profile, so that you can really know which direction. This is the trade we took. As I told you, it's still going up for this liquidity here. How did we get this profile? Is because of this concept that I'm talking about, this concept of the profiling. Now, did this take away liquid? This trade take liquidity before going up? Yes. Where is the liquidity? It took out liquidity from this point, and that was what I was looking for, because I have come to understand that this is an engineered liquidity, just like the up has been engineered as well. These other ones here has been engineered. This is engineered liquidity, engineered liquidity, engineered liquidity. So I wasn't I didn't have the double mind to take the trade, because I understood that this will be a straight up trend going up to take out this liquidity. Reason being that, one, from the weekly, we want it to first of all go up. Remember, we want it to first of all go up before it comes down. So this is Sunday. So if we are looking for downward movement, then we need it to go up. But it has to show us that we will not just enter and start longing. It might start shorting before going up. Like I told you, there are some that will manipulate you to short. It's shorting, and it's shorting weak. Let us also short with it, and then it will now start going up again before it will now start shorting, and you say you were right, but you were not right. So first of all, you have to look for things like liquidity grab. So but this one will not take out this liquidity. Why? Because it is engineered. That's what I'm trying to say. It's engineered. This liquidity is waiting for a particular time. Okay, so that's it. So the weekly profile of today is this. So this, just from here now to just here, could be my trade for today, and I'm done. Like, I'm just done. Take it from here. Okay, that should be around 1 point something, 1.7. Multiply it by the lot I use, which is 4, and 2 positions I open on a small account of $10. See, okay, $11. You see, I've gotten $18 now. Just as simple as that. But this is a demo though. This is a demo. So just as simple as that, you could just get that. So let me break this particular entry now further, since I've done the profiling, and I think you've understood the profiling. So back to 15 minutes now, down to 15 minutes. So catching, when you know when you've understood the, what do you want again? Okay, sorry, I took a break to do something. So now, the high or low of the day could be formed anytime within the day. That's one thing that you should understand. This is 15 minutes, and it's also using the daily profile as well. So now, someone that did not know if the high or low of the day has been formed could just maybe come here and pick it as the high, as maybe liquidity has been swept here. Let me no. You need to wait for it to actually get formed before you pick it. Okay, now if you can see this market, it was trending down. Okay, coming down. Even at this point, it swept all this liquidity, came back. At this point, it swept this as well before breaking. So when it broke, what did it do? It formed this. It came back down, went up. It was at this point that I said no, that this trade has changed, and that this is a valid order block. Now you see our order block principle I've entered, and I said no, that whenever this comes back down again, this is an order block for it to react from, and I have a clear liquidity up for it to tap into. Okay, so this one now is a very, let me map out the other block. This now is a very clear indication of what I'm talking about. This one is what we call trading, over trading. I could be doing this video and it will go and hit our take profits, this level, but when the video is very long. So this is it, the entry. This is where I took the entry from. Immediately I saw it happen here, I saw this, and then I started moving down to a lower time frame to pick my entry. I took the entry at this point. It jumped. Normally I don't like seeing this jumping and all that, and all this type of, like, I don't like seeing openings. Okay, like this now, I wouldn't love to have seen this type of opening, and then I'll be very confident to still take the trade. But why I was able to take it is because the strategy says take it, and the description, how I have positioned everything, described it like step by step. I did those things before I was able to note that yes, you should be able to take this trade at this point, and it gave that. So these are the profile work that has to be put in before you can take a particular entry and expect it to just go directly to your take profit and hit it and come back. So that is how this tracing down to 1 minute. That's how I got the entry, and it will hit this and then come back down. When it hits this now, I expect it to come back down to cap the weekly close. Okay, yes, to close, because the candle for the weekly will have to be low, high, and then close. That is how it's always been. So that is the thing I wanted to incorporate. So let's go back to the, I can now remove the period separator. It's making the chart somehow. Okay, so this is it. So let's just watch out how the weekly will be, the weekly profiling will play out, whether it will be on Tuesday or on Monday or on Wednesday. Whenever it is ready, we take the sell and then keep our fingers crossed. But one thing I will do is that I will come back here. If it played out well, I will let you know. If it didn't play out well, I will still let you know. This is just Sunday. Today is just Sunday. So as it goes ahead, I'll still let you know that this is how it plays. Thank you very much.